Hi, this is Wayne Zell, and you're listening to Blueprint for Wealth on your video cast today. And our special guest was just talking about a variety of topics, but one caught my attention in particular, and that was Reps and Warranties Insurance, Representations and Warranties Insurance. So here's a little educational moment about R&W Insurance. So here are the key takeaways. We're going to talk about what R&W Insurance is, the difference between sell-side and buy-side insurance, limitations on what the insurance may cover, what it costs, what's a deductible and how does it work, what's the process for getting R&W insurance, and what happens if a claim is made. It's a special kind of insurance that is used to protect people in a corporate transaction like an acquisition or a merger. It covers indemnity or liability for a seller's usually breaches of reps and warranties, representations and warranties that they make in the M&A agreement. Now, according to some recent literature, it's used in about a quarter of all private deals, but I was just talking to an investment banker who said that 90% of the deals that he did last year had reps and warranties insurance, and they were all private deals. The sweet spot for R&W insurance is for a deal that is between $20 million all the way up to $2 billion. So I've used it in deals that are $50, $70 million in size, and it works really well. A seller-side transaction rep and warranty insurance covers the seller's liability that arise from the seller's breaches of reps and warranties that he or she has made in selling the business in the purchase agreement. It does not cover a breach of, say, a non-compete agreement or other covenants. But it also can remove some contingencies from negotiations between the buyer and the seller, particularly relating to tax issues. And it minimizes the buyer's potential liability for successor liability that might arise in an asset deal. Buy side, it helps the buyer compete in an auction process if the buyer puts forth the ability to use R&W insurance, particularly if the buyer bears the cost. It allows for longer survival periods without the seller being nervous about having to make reps and warranties over a period longer than a year or 2 years. And the coverage limit may be higher than what the seller is willing to give in the transaction. So it helps bridge the gap between the seller and the buyer. These policies typically include coverage for loss from claims that are made. They're very general, blanket coverage versus dealing with specific issues. And the market typically will dictate what's acceptable depending on whether a lot of claims are being made under these policies. It covers defense costs usually, including the attorney's fees and expenses. It excludes almost always certain known issues. So, for example, if there's a problem that was identified in the disclosure schedule to a purchase agreement, the R&W insurance is not going to cover that problem. It also doesn't cover purchase price adjustments, net working capital, net worth adjustments that might be included in the deal. Typically excluded from an R&W insurance are benefit plan issues or underfunded pensions, Foreign Corrupt Practices Act claims, and certain environmental and product liability claims that might arise. And clearly, if the seller has committed fraud, that's a carve-out which will be excluded from reps and warranties insurance coverage. Various factors influence the cost of the insurance. What are the nature of the risks involved? How much diligence is needed to make sure that the insurer is protected as well as the buyer is protected in this deal? What did the quality of earnings analysis reveal in due diligence? And how big is the deductible? Usually the price ranges from 2.5% to 4% of the liability limit. And the liability limit is not unlimited. Typically it might be limited to 10 to 15% of the overall transaction value. Proceeds from a policy will result in taxable gain or taxable income to the buyer. So the buyer may want to to build in some kind of tax gross-up into the negotiation of the R&W insurance. And usually, particularly in large deals or complicated deals, the underwriter wants a fee to protect them from the deal not going forward. So anywhere from $25,000 to $50,000 plus maybe additional fees depending on what additional coverage might be demanded under the policy. A deductible is essentially a retention amount. It's usually based on the transaction value, and it generally ranges from 1% to 3%. It varies based on the risks involved, but if the risk is low, the deductible might be structured as an escrow. So instead of requiring a deductible of 1%, the buyer might demand that the seller set aside funds equal to 0.5%, and therefore share the risk on the deductible on the policy. It's usually very fast track. The insurers want to get done really fast. So what's the process? Well, a lot of the people who work for these insurance companies handling R&W insurance are former merger and acquisition lawyers who have familiarity with the deals and the complexities, and they're good at making the process move quickly. Having a good insurance broker is also helpful. It might take a couple of days to get a non-binding indication that the reps and warranties insurance will be placed. Then they're going to give you a list of diligence requests, which hopefully will be similar to what the buyer asked of the seller in the deal. And they want to have access to all the diligence that's been provided from the seller to the buyer in the deal. So usually they'll demand access into the data room where all of this information is posted. A week later, it may be that fast. The carrier discusses any diligence issues with the buyer and possibly the seller, and then they'll want to make sure that the acquisition agreement conforms to the insurance policy and vice versa, so that there are no hidden gotchas in the deal. Claims. There's no real specific data, but anecdotally, we've heard that claims notices are received in about 25% of the cases in the U.S., and about 12%, a lower amount, in Europe and Asia. And usually of those claims that are made, half are settled or resolved within the deductible amount. If you want to know more about reps and warranties insurance, we'd be happy to discuss it with you, as well as your pending acquisition. Give us a call at Zell Law at 571-203-9355, or visit us on the web at zelllaw.com. Thanks for watching Blueprint for Wealth, and we hope you have a great week.